The purpose of today's video is I want to go over the limited public service loan forgiveness waiver and a few stories behind circumstances in which the Biden administration has decided to waive loan amounts, and literally what they're doing is just increasing people's qualifying payments. So I'm going to explain a little bit about what the limited waiver program does, as well as who is a good fit and some stories behind scenarios so you can fully understand if you're considered as part of this group, okay? So first of all, the limited waiver is to recognize the fact that the government rolled out the public service loan forgiveness program and had a lot of administrative requirements that even if borrowers tried to meet, the servicers mismanaged the program and as a result would put borrowers into forbearance or would not count their payments for whatever reason. And as a result, it decreased people's payment count and they spend years extra paying and not getting that time counted even though they're working for a nonprofit. So the government has decided to basically go back and recount. And so what can you do as a borrower to make sure you get more payments counted? Okay, that's the point of this video. So for example, people not understanding if they had family educational loans, that's one scenario. Family educational loans, paid it for like a year and then ended up consolidating it. They'll look at counting FFEL, the family educational loans, that time if you're working for a nonprofit to count. That's one scenario. A second scenario is if, for example, you went to serve in the military specifically, but Peace Corps, AmeriCorps as well, and you went into forbearance, or your loan provider put you into forbearance automatically, getting that time counted. And then, of course, if you were not exactly in an income-driven payment plan and you were in some other plan working for a nonprofit, you could probably build yourself a case as well. What I would recommend is people write a letter to their servicer asking for a recount and asking for the time they don't have counted to count towards public service loan forgiveness if you're working at a nonprofit during that time. It doesn't hurt. For every payment you get counted, that's if your payment's $500, that's $500 less you have to pay, right? So it absolutely does not hurt. If you're unsure of whether that time counts or what to write or what not, we're happy to give you feedback on that at LoanSense. But essentially, let me talk about a few scenarios. So a few scenarios of people we've worked with and we've heard is, for example, they did everything right to enroll in the public service loan forgiveness program, and then they go serve abroad, whether it's in Peace Corps or the military, and they put their loans into forbearance and they go abroad for 2-3 years, and now all of a sudden that time doesn't count, right? It's like, well, that time should count, because if you went onto an income-driven plan and you're serving somewhere in Guatemala and making barely any money, that time should count, okay? So going back and filing a letter and asking for that time to count is crucial. Another scenario is, for example, and we hear these stories all the time, people who go work for like a university system, right? Whether they work as a program manager, even if they're not a professor per se, and they call their servicer and their servicer didn't tell them to get into IDR, there's an income-driven repayment plan. Their servicer says, hey, go on to this graduated plan. Or, this graduated plan, because it starts out lower and then every 2 years it increases. So now they're on like year 4 or 6 of payments and their payments keep on increasing. Meanwhile, they started a family and they're like, oh my God, this is unmanageable, but what am I supposed to do? Like, I don't want to start my payment plan over again, you know? So they just pay it and struggle financially. But it turns out that entire time they've been paying for 4 to 6 years hasn't counted because it's not an income-driven repayment plan. And that's what they technically need to be in to get loan forgiveness. So if that's you, you should absolutely be filing letters and to your loan servicer asking for that time to be counted because you were misguided by the servicer to enter into the wrong plan that doesn't count for PSLF. Those are a few solid scenarios. Also, let's say, for example, your servicer miscalculated your payment, or there was a payment change, and you came back and said to them, hey, wait, why did my payment change? Or you paid more and they counted as paid ahead. And then let's say you paid one lump sum and you don't pay for 5 months, and they don't count that time as qualified payments. That's also wrong. That time should be counted. So there's all kinds of scenarios in which your servicer doesn't count that time. We need to go back and file a letter asking them to recognize those months, because there are people, because what happens a lot of times is the servicer will just put your loans into forbearance while they figure it out, and figuring it out could take like 6 months. Well, that time can potentially be counted towards PSLF because that was not your fault. So this is all the scenarios that is covered by the limited PSLF waiver. And so what we'd like to recommend is don't wait for mass forgiveness of like $50,000. Actively work on these little programs that the Biden administration is coming up with right now, because they can be really, really key to getting months and months counted. I mean, we have helped people get, up to 8 years of previous payments counted, all the way to filing through temporary expanded public service loan forgiveness and getting, their entire loan balance forgiven, because we were able to go back and recognize the entire time they've been paying loans as counting for loan forgiveness. We've also helped people who entered into even lower payment plans that weren't counted because they consolidated their loan, to get their payments counted towards loan forgiveness. So there's all kinds of scenarios. We've helped people get disability discharge. It's just a matter of really understanding the rules and knowing what to ask for. That's really, really important when you write these letters or when you file into specific plans, okay? So much of this work is what I call self-advocacy. Advocacy is apparently a legal term we're not supposed to use because we're not lawyers, but there's nothing wrong with getting support to self-advocate. And that's what we want to help borrowers do, okay? Because if you qualify and are eligible to get your loans forgiven, or additional 6 months to 6 years, or whatever the time is, counted towards forgiveness, like, don't hold back, get started. Payments get kicked back into January. Wouldn't it be great to have 2, 3, 4, 5 years fewer time to pay compared to what you thought you had to pay? We're here to build those strategies and help borrowers regardless of what their payment history has been. So we're here to help get you started, myloansense.com.